Okay, great. A very good evening to all our members in the audience. And thank you for staying back for the last session of the day. I'm sure it will be worth your time. So here we are discussing Fintech 3.0. So before I get into the discussion mode with all of you, I want a quick comment from each one of you. Do you think AI has changed the face of Fintech, which we are going to see in the future now? Along with that, a quick brief introduction.
Hello, this is Anup Agarwal. I am co-founder CEO of Kiwi. We want to become the largest everyday UPI credit card for India in India. AI has definitely penetrated deep in our tech ecosystem. On the consumer side, we are working on it. We'll talk about a few use cases as we go through this session. But yeah, AI is getting deeper and deeper into our everyday lives, and happy to explore this with the panelists here.
Good evening, everyone. Thanks for staying back, and I think long day for all of you. I'm from Cashfree Payments, and yeah, definitely AI is there in all the products that we build, and fraud and risk is a big challenge with growth of AI. I think all of us have seen a lot of security incidents also coming, and every day we see things about cyber crimes, right? Like senior citizens being held hostage, etc. And so we are building products which are AI native in identity verification, proving that this particular person is who they are claiming to be, preventing a lot of fraud before they actually happen. Yeah, so definitely AI is there in all the products that how we build as well as how it interfaces with the end customer.
Hi everyone. This is Sagar Agarvwal. I'm the founder and managing partner of a fund called Beams Fintech Fund. We primarily invest in growth stage companies in fintech and financial services. On your question on AI, right? I think we're learning AI more than anything else. I think founders are building AI and using AI. There's a lot of conversation around AI. We are visibly noticing that at board meetings. We're visibly noticing it at various founder discussions when we are talking to companies, when we are evaluating companies. So there's definitely a lot of conversations. We have to still see massive ROI change, right? And that's what we are waiting for. But definitely a good conversation happening around AI across India, across founders.
Hi, this is Joydip. I represent Scienaptic. We call ourselves Scienaptic.ai. So yeah, definitely doing a lot of stuff in the AI side. We are in the lending space, so credit underwriting, very regulated. So a lot of maverick AI doesn't have any place because of the regulation. AI is definitely changing the landscape. We've been doing more controlled machine learning type of AI for the last decade. We'll talk more about that, but I think a lot of what I see people trying out is AI for the sake of doing AI. And I try to run away from those conversations because unless you have a use case and an actual business problem, it becomes a case of the tail wagging the dog. So we'll discuss more about that.
So I think by the end of this panel discussion, we'll come to know whether it's going to change or not. So Anup, I'm going to start with you first. And my question to you is, so with the rise of credit on UPI and access to rich behavioral data, how does this reshape the way you tailor credit products compared to traditional credit card models?
Thanks. So as Joydip said, we'll not talk about generic AI stuff, that AI is changing the world and all of that. So maybe what I'll do is maybe we'll talk about how we are using AI and changing certain use cases or using it certain use cases which we believe is going to fundamentally change the way consumer lives are impacted. If you think about a small use case of credit card offers which comes to consumers today, right? You get an offer of 50% off on your next gym and the consumer doesn't go to gym, right? And maybe the consumer goes to the gym, but the renewal is in December, he's getting the offer in the month of May. So offer is irrelevant, timing mismatch is there. And how do you create offers at scale which is personalized to an individual level? So I will talk about Kiwi. And we are one of the largest UPI credit card player. Obviously, we have a lot of consumer data. So we understand consumer very, very deeply. So what we are building is the platform which we call internally is KMax. It's a completely agentic offer engine, personalized offer engine which we have built. So what it does is it understands consumer behavior, identifies what offer will work for that consumer. So if somebody is using Swiggy as a platform and somebody is using Zomato as a platform, it will generate different offer for different consumers, different related to different brands. MOV will be different. Then it gets into the financial model, which says whether the offer is financially viable for us or not. Then it pushes that offer into the offer engine, which gets onto the consumer app and then completes the fulfillment on offer. And if you think about traditional banks, right, they think about offer as campaigns. So static 50 offers will be live at a point in time. We want to issue 500 parallel offers real time on a weekly basis. This can only be possible with agentic AI platforms, which not only creates, so think about the offer which gets ready for the consumer. We generate the creative, the terms and conditions, and pushing into the app all real time. So all of this happens instantly, parallelly for consumer at a large scale. So this is what we are building, and as I said, hyper personalization will happen because think about the old way of doing it. Yeah. It was manual. One consumer had to, an employee of a bank had to go create an offer, get a terms and condition, signed off by legal and compliance, post it into offer engine, make sure there is a fulfillment. So if you are giving an offer and 50 rupees off needs to be given, there has to be a logic which has to be coded somewhere. All of it at hyper scale will start to get developed, and we have built that platform. Right now we are doing it at small scale, testing it out, but we'll scale it up. And that is how the future is going to change, where you are taking consumer behavior very, and listening to that consumer behavior deeply and creating very personalized offer. That's how we are doing hyper personalization at Kiwi. This was one of the use cases which we have.
Ram, I'm going to come to you next. At Cashfree, you're handling massive amount of money, and again, these transactions, how they are further being rediscovered with the help of AI. Can you share some anecdotes around it?
Yeah, sure. We process upwards of $80 billion per year, right? And growing every year. So that's huge volume of data and different varieties of data, right? Like we have merchants who are small, medium businesses to the biggest enterprises in India. So we see a variety of transactions, and millions of users across India use Cashfree payments to make the transactions. So with that wealth of knowledge and different signals coming from their devices, their device fingerprinting, etc., we have a massive graph database of all the signals and how they relate to each other. With that, we are able to prevent fraud, and that protects us, protects the merchants, protects all the players in the ecosystem, because when the chargeback comes and we are not able to recover it from the merchant, it comes onto our books. So it'll directly affect our bottom line. So we have a skin in the game to make this whole ecosystem secure. So a lot of AI is being used there. And while we talk about security and safety, we have to talk about speed also, right? If today's age, right, I think if it takes more than a few seconds, people will cancel that thing, and that's lost business for our merchants. So how do we scale security, right? So we have adaptive security there. So we know a sense of, okay, who is this person? Who is this merchant? What are they buying? At what time are they buying? From what location are they buying? And we get a sense of what is the probability of fraud going to happen. Then we have adaptive mechanisms to increase the proof that is needed that so-and-so is doing. We have 2DS, 3DS in our cross-border payments. So we balance the success rate with security, right? So speed and security is a hard problem to solve, and we are solving that. And I think that's a significant place where we use AI. And I also talked about video KYC, right? So now there are a lot of fakes happening, right? And we are there to find that out also, right? So we use AI to beat AI, and this is going to be a cat and mouse game. And I'm sure now with Mythos coming, they are saying that it has potential to cause even more damage. But we'll be using things like Mythos only to protect the good players out in the ecosystem. So it's going to be an interesting game of how AI is used, both by the bad guys and the good guys.
Certainly. Sagar, I come to you. You wear the investor's hat, and you've been investing in fintech for close to 2 decades now. And with your first fund being closed now, and now you're looking for the second fund. So what kind of new problems you're looking at, in terms of the startups, how they are solving it, how they are looking at fintech with newer lenses, and whether it's AI or something else, which you see, the tech way of looking at things differently?
No, I think interesting as we think about investing, we think about decades, right, rather than years. We feel that we should think about what will happen in India in the next 10 years, right, and how all technology which is available in the market, including AI, what is the difference or the change it's going to make to consumer and the businesses, right? We have to look at both the aspects of the angle. In consumer, can the credit be better, right? Can the payments be better? Can the insurance be better? Can the wealth be offered in a better way? That's the question we are asking every day. And what can be better over there? Can the speed of execution better, which we've already solved for, seems like a lot of it? Can the quality of product be better? Can hyper-personalization be one of the outcomes, right? Can you weed out more fraudulent actors in the ecosystem? So we try to identify what is going to transform in the next decade on the consumer side and the business side, and accordingly identify. So there are 5 major buckets that we look at. We look at payments, we look at banking, lending, insurance, wealth, and banking infrastructure, right? These are 6 buckets that we largely look at when we evaluate a company or a segment, right? And within that, then we go deeper and we try to look for opportunities. Interestingly, since we are on the AI panel and discussion, AI is now becoming a real conversation, right? And as on a lighter note, I mentioned that there's a lot of discussion. Some of our companies are actually using it, right? As Anup mentioned, they are doing a lot more work on the offer side from an anecdote perspective, right? As you mentioned about the weeding out bad actors, right? At the same time, our company is also solving for internal workflows. Right? A lot of internal workflows were earlier driven by a bunch of human bodies, right? You can throw a lot of bodies at the problem, but now AI is solving for a lot of that very fast. So that's really a value. So we're looking at companies which can help fintechs, right, improve their processes and systems using AI, for that matter. That's one of the spaces where we're very active. I think personal financial management, right, which is where something like what you guys are doing. Can we enable consumer to build a better lifestyle, a better credit score, a better investing profile, a better learning experience when he's thinking about stock markets or building his own income, right, for that matter. So personal financial management is something that we are very excited about in the AI space. I think a lot of work is happening on the corporate and small, medium and large enterprise on the AI front as well. Businesses are getting much more smarter about how they want to discount their bills, how they want to arrange for their cash flows. Can there be more predictability? Can there be much more faster turnaround in their cash flow management, thanks to payment companies? So a lot of those things are now evolving. So when we talk about investing, we're looking at what is going to happen in both the consumer piece and the business piece from a decade standpoint. And where will AI play a role? Where will ML play a role? Where will international technology play a role? And can we do something over there to create value for the businesses and the consumers at the same time?
Given your work in AI-powered credit underwriting, how do we ensure that these predictive models remain explainable to regulators while still being sophisticated enough to detect complex AI/ML patterns?
I don't know how many people here are familiar with the lending landscape and AI and explainability. So basically, I think great question. So AI can be a bit of a black box, right? So it's a multi-dimensional model with lots of variables and non-linear curves, right? Which cannot be put into an equation. So in banking, if somebody applies for a loan or a card, and if you decline that person, then the regulators have all the right to ask the NBFC or the bank, on what basis did you decline the person? And if they say it is on the basis of the AI model, and I don't know what variables went in, but here are the 200 variables that went in and it did something, that's not a good answer. So explainability is really the art or the science of being able to explain to the regulators, internal and external, what parameters did you choose to make a certain decision. So Scienaptic is in that field, and we also do a lot of work in the US where all of this regulation is much tighter, even a decade ago. In AI, to put it in very simple terms, it's hard to make an overall AI model explainable or at an overall level because there is so many parameters. I think the way we have cracked the explainability is by being able to make each individual application decision explainable. So what we do is, let's say you apply for a card and there are hundreds of parameters and a lot of complex formula going into the model, and you come up with a score for you. What we then do is we run a sort of a sensitivity check to say, out of all these parameters, which are the ones that had the biggest negative effect of dropping your score in your case. So let's call them the red flags. And then which are the ones which had the positive effect. So we call them adverse action reasoning. But essentially, we've been able to go to regulators across multiple countries in the world and explain to them that no matter what application comes in, we are able to explain why we declined that application or why we approved it, and exactly what parameters went in. But I think that's sort of the explainability, the science behind explainability that at least we follow. But I think at a more broader scale, one of the inhibitors to using AI for credit decision making or any regulated decision making is the lack of explainability or the kind of black boxiness. So it doesn't matter as much if you're doing a sales campaign or a collections campaign, because as Anup was mentioning, if you don't use AI very smartly, you can maybe call somebody at the wrong time when he doesn't need a certain product, right? So that impacts your P&L, but the regulators aren't worried that much. But if somebody comes in for a loan and you discriminate against that person in a way that's out of control, then you are in trouble as a lending institution. So I think that's one of the big reasons why in the decision-making aspect of it, while there are a lot of LLMs which tend to hallucinate a lot, it's hard to kind of put them and make a decision, because you can't just say that they hallucinated and I'm at the mercy of the LLMs. So that's indeed an actual problem that's yet to be solved.
Sure. So my next question is, like you can hear me? My next question is to all of you founders. I mean, when we're discussing about AI, I was in conversation with the Voice AI country head of 11 labs talking about the issues with Voice AI and the kind of cloning which is happening. So in fintech, that's happening fairly at a large scale. So how do you ensure that, these frauds and, the kind of double transactions and other issues which we are seeing in fintech particularly, this is being taken care of with the help of AI? Or is it still a threat and you have not been able to take care of it?
Yeah, I think some of the points I was touching upon, right? Like, so with all the transaction history of a particular person, a particular phone number that they're using, a particular device that they're using, also anonymous data about different IP addresses that fraud happens from, maybe a location that it happens from. All of that is gathered and then utilized to predict the fraud score of a particular transaction, right? So in real time, we can block the transactions, but then that is adaptive as well, right? Like certain things we can do very quickly, but to do a more detailed analysis, it might take a few minutes, right? And the whole transaction can't wait. So we do the for sure thing blocking immediately. And then there can be things done after that also to prevent a chargeback. The order can be cancelled and the refund can be issued much sooner, because the chargeback doesn't actually accrue, right? So we are doing it, and right, we've reduced fraud by 70%, right, from the previous year to our current year. It's significant reduction in frauds. And the other thing that I was saying was the identity fraud, right? To proving, like when someone comes to them to get a loan, right? Like there are a lot of KYC that needs to be done, and certain things require video KYC, etc. Right? So there also frauds are happening. So we do dynamic liveness check to make sure that it's not AI sitting there and masquerading as that particular person, etc. So all that is happening, and now cross-border transactions are also increasing, and the ticket size is also bigger on those transactions, and hence the losses can also be significantly bigger, and it's much harder to recover from a cross-border merchant or a customer, right? So the stakes are very, very high there, and so we are investing there as well, and there we do also get data from other providers in other countries, and all of that is put together to make that final decision. Is it good transaction or a bad transaction? And yeah, significant progress is being made, and it'll be a journey that is continuing.
I'll just add to that perspective. I think from onboarding a customer to underwriting to collections, right, and to servicing a customer, we've seen across the places there have been cases where there's been challenges in frauds, right? From impersonation of the individual to by mistakenly underwriting the wrong customer into the ecosystem, right? Because he's using the wrong details for that matter. Even in collections, we've seen people are using wrong links to send it to the customer to make the payment, right? Insurance claims settlement has been a big issue in the country. In wealth, there are a lot of challenges because fraud groups are being presented where people are actually investing money as well, right? So across the board, we've seen different levels of frauds happening. And now with the advent of models, right? Big and large both, right? And small and large both, you're able to now solve for some of those problems. Slightly more predictive in nature, right? Not completely, but some slightly more predictive in nature. Machine learning used to do that a lot of, but it was more rule-based. Yeah. This is more deterministic in nature, so you're able to see a little bit more and put more models into perspective. So I think it's a much better time to be when you're building in the fintech space. Obviously, regulations play a very important role on what you can do and cannot do, right? I think RBI will come up with own set of regulations around what you can use and what you cannot use and what will be applicable and cannot be applicable. So interesting times to see how this plays out as well for all the founders as well in the journey.
Anup, any percentage you would like to put in terms of the fraud detection which has come down with the use of AI?
Sorry, I could not hear you properly.
What percentage of fraud are you seeing or you've been able to stop through AI?
So currently the way we work, it's the banks who take the risk. So personally at Kiwi, we don't take the fraud risk onto our table. So we don't see that risk at this point in time, or we don't model for that in our company. But yeah, Cashfree I think would be seeing a lot of it. So I think Cashfree might be able to comment on it.
I'll just add one point in the case of fraud. See, it's a double-edged sword. So one metric that typically people look for is if there are 100 frauds that occurred, what percentage of those frauds were you able to detect ahead of time, right? So that number, 80%, is awesome. But the other part is also true, which is called false positives. So you detected that 80%, but you classified another 1,000 of them as potential frauds, out of which 920 were deemed to be non-fraudulent, right? So that just kills your fraud analysis team because they are not set up to do so much. So I think the accuracy part of fraud has, you have to define both the balancing metrics. I think the other thing with fraud that we've seen, at least in the credit side, is unlike models used for other use cases where there is a history and the machine learns from it, to the machine learning point you just made, and then it can predict, assuming that history would more or less repeat itself. But today in fraud, particularly in the Indian landscape, fraudsters are bigger innovators and also using AI, perhaps smarter than the banks, right, in some cases. So machine learning is not as effective and it will generate a lot of false positives. Again, not to get too technical, one of the other things we use is the clustering technique or the anomaly detection techniques, where we say that, okay, I have looked at millions of data in the past, and I have created some clusters of individuals that tend to behave in a similar way because certain parameters are similar. And when a new application comes in for a credit card, the model tries to put them to a couple of clusters and say, you seem to exhibit similar behavior to cluster A and cluster C, but then you're not behaving similar to them. They tend to shop for small tickets and you're doing large ticket, or you're shopping in the midnight, or you're in the US shopping where these people do shop domestically, or whatever. And so I'm flagging you as a potential fraud. So there are different techniques that are coming up using AI that for fraud which weren't there before.
On the floor for audience Q&A, because we are running a little short on time. So tell me, if you have to pick one, whether it's personalization for customers, is it efficiency, or is it going to be customer experience? What will you bet on in terms of the usage of AI, and how will you calculate the ROI on it?
So I think currently it's clearly efficiency which has scored a lot of points. I was telling Sagar, we are a 65-member company right now. Coding is a skill which we have said to our engineers that it is not going to be any alpha creator for our engineers. So efficiency is clearly something which has panned out in a way which we have actually, we are seeing on a daily basis. Personalization is something which we are investing in, and hopefully we'll see it out. But yeah, right now, efficiency is clearly out there.
Yeah, I think we think we're also a tech-first company, so a lot of efficiency gains in that. But at the end, there's going to be time saved for those developers, right? So we strongly believe, because that thing is there, that will AI take my jobs away? But we strongly believe that people will adapt and use that time saved to do more creative things, just like how they built all of these LLMs. It was the same human beings who built all of these LLMs by time saved by tech earlier, right? So, and I think we've also heard that people are becoming like machines, right? A lot of times you call a customer care or you're at a hotel desk, people used to complain. Now with AI saving them time, maybe machines will become like humans will become also better humans. And I think it'll improve the human experience, right? Efficiency will be the input metrics, but the outcome, I'm very positive that all of us will be in a better place with AI helping humans.
Yeah, I think AI alone itself will not be able to do a lot of work, right? I think it's AI plus human in the loop will help a lot of journeys. I think sales, customer experience, and efficiency, right? All three of them somewhere dovetail into each other. And we're seeing a lot of those happening in the portfolio companies as well, where companies are really able to give better customer service, they're able to really do effective sales and bring efficiency in the workflow. So productivity is gone up significantly. I was having a conversation with one of the founders. He was telling me every time somebody resigns, he doesn't hire a new person. He's like, I don't need to hire anybody. That work gets automatically distributed amongst the same set of people, and the efficiency has gone up 10x, right? And nobody's saying that this is too much work, right? Same thing on compliance and regulation. I think now it has become a nature that AI is enabling you to be so much more compliant, because you're able to keep a tab of what needs to be done, right? And follow it to the T. And where you're missing the step, where you're missing the journey, you can actually solve for that as well. So a bunch of places we are seeing not just in efficiency, but productivity, sales, customer experience, customer support overall.
Yeah, I think I agree with obviously everything that has been said. I think maybe one way to look at this problem is in two layers. I think the bottom layer is the efficiency, automation, productivity, where you are doing all the work with less people. And I think that's where we are seeing most of the AI right now. I think that very soon, what I'm defining as the intelligence layer, I think AI will come to that level and say it's not just about reducing people, doing things faster, better for the customer and more profitability for the people, for the company because of productivity. I think then the intelligence will actually say, I think as Anup was saying, that how do you time your call, outbound call at the right time, and what product does that person need? Because during Diwali time, this guy builds up inventory, so he needs a small inventory loan, but he only needs it for 3 months because in January, he'll get all the cash and he can repay it. So, that's just an example because I'm in the lending space. But I think that's when things will get really interesting. And that's when AI is not for the sake of AI. It's for the sake of solving some vertical use cases. So I think the people who define those use cases smartly, and then our domain experts will be able to solve. One company cannot solve many of those use cases. So it's about, I think as a company, what we are trying to do is partner with some of our larger lending clients and define some use cases that are their pain points, and seeing if we can collaborate and solve the intelligence layer. So I think eventually that will probably also overtake the productivity layer in the use of AI.
Sure. Well said. With that, I open the floor for questions.
Hi, everybody. This is Sanjeta. I come from Helborn. I work in Fintech cybersecurity. So me and my team of ethical hackers attempt to break into large financial institutions and fintech companies to see if we're actually as secure. And interesting findings, but very exciting panel today. And my question is, considering how all of you are operating in the fintech space today and the AI efficiency gains that we've talked about, are we in the Indian landscape? Do you think there should be more government-based or regulatory or compliance controls or guardrails in place to make sure that yes, AI is very effective, but we're also seeing cases of how AI can be misused in this particular landscape where people are trusting fintech companies with their money. So, do you think we should have guardrails like this in the Indian landscape, especially if we compare to our counterparts like the INAPTA Act in Europe or the Clarity Act or the Genius Act in the US? What would be your take on that?
I'll just quickly answer and then I'll pass it on here. Absolutely. I think with AI, fraudsters and hackers are using that for their own benefit. So unless the regulation keeps up pace, we'll give them a free hand. But at the same time, I think to be very realistic, you can put only that much of regulation, right? You can't regulate everything because then you'll stifle innovation. You can just kill all the fintechs, and you will go back to the good old days of brick and mortar. So I think there's I don't know. I think there will always be the 5% of unethical crowd which will destroy the system or do malpractices. So short answer is yes, regulation will have to happen, and it's happening. I think RBI is trying to keep up. But see, the hackers take one wedge and hack using that, right? Yeah, I can give you tons of example. But when you put a regulation, you cannot have 2,000 pieces of regulation for each case. So it has to be a blanket. So you maybe kill that hack, but you also kill 5 other ways of innovation. So I think that's why the regulators are always thinking twice and thrice before doing it. Short answer is yes.
So this is not something we have experienced personally at Kiwi, but this is readings I have been doing. So I don't know if you recently heard Claude CEO say the recent model is so good that it breaks the encryption logic on which the entire banking ecosystem is built. If that is going to come, and if we are not prepared for that, I don't know how it will be managed in future. I think for stuff like that, there is definitely regulation has to be there. But I don't know how do we solve those kind of problems. I think these are problems so big. I don't know how will that be managed. But yeah, it is going to be interesting. It is going to be seen how we are going to manage that kind of problems. But it is definitely going to come. The quantum computing is going to break the SHF, logics and all of that. We know that. So it will be interesting. I don't think so I have an answer. Gentlemen here are more well read than me. But yeah, it is going to be interesting to see how it pans out.
My thought is regulation applies to in general, the good guys who are willing to play by the rules, right? So now we regulate the usage of all of this to companies like Cashfree Payments. And the hackers are going to somehow get it, or they're going to build the model, or maybe somehow get their hands on it, right? So now sort of we are saying you play by the books thing. If in that, interpreting your question in that sense, right? So if Mythos is very powerful, then I think we should be able to use it in both places. But there are the other things also, right? Now I saw on a LinkedIn post that a lot of recruiting screening is happening by AI agents, and a very good person might get rejected because of that. So there and all, maybe some regulation, but again, it's very hard, right? How many things are you going to regulate? So maybe I was thinking maybe some transparency and auditability or explainability, as he was putting, if that is there, then people will be at least on the guard that I will be audited at any point of time. And once transparency comes in, and then we give recourse to people to file grievances. And at that time, when we go deep dive, I think that itself will maybe balance regulation versus innovation, is sort of my thought. And I think we are also getting DPDP and all that. So that will also help.
What we are doing is that instead of waiting for the regulation, we are recommending our companies to proactively have a conversation at the board meetings, make a presentation of what are you using in AI, what is the impact that companies having positively or negatively, right? What are the bad actors that we are facing regularly? What are the mitigants we are putting in place? What budget we are allocating for that, right? And if there is a budget, what is the utilization of that budget? Because you cannot obviously solve for everything and can't wait for the regulations to come, but can you proactively prepare for it, right? Put the guardrails around it. As they say, the bad actors have to only win once, right? If they win once, most of the people will get suffered in the journey. So we want to push as much as possible at board meetings that try and put these guardrails now instead of being napping at the wheel, because tomorrow when it comes, and it will come faster, then it'll become very tough for all of us to manage, right? It's getting there. There's risk committees being put in place. There's governance committees being put in place. There's policy committees being put in place. But at least we can recommend only, right? That you need to put these guardrails. Eventually what will happen and what regulations come out will be the factor of time. And some of the US models and European models are only guiding factor, right? You have to think about India and then implement some of that in India using some of those portions. So let's see how that pans out over there.